Welcome back. So I think that we'll all agree that South Africa is in uncharted waters right now of a coalition government which presents new risks for investors to navigate. And to reflect on the asset allocation strategy it's deploying through this time of uncertainty, I'm joined by Handre Retief, a portfolio manager over at Novara. Handre, thanks so much for your time. So in your write-up, you ask the question as to whether this is the time for retirement funds to consider hedge funds in asset allocation, and you make reference to this, of course, as the whole, the broader part of risk management vis-a-vis returns. So give us the case for and against.
Thanks, Vivi. Thanks for having us. I think we're probably in the camp for the case for hedge funds in a portfolio, and the answer is straightforward. It's risk mitigation at the end of the day, Vivi. We think long only, there's always a place for that, and we run some long only mandates as well. But we think on the hedge fund, especially when you look at long short and you look at market neutral, we think there's a lot of short opportunities in the South African market as well. And going into US season, you can see that there's a lot of short opportunities offshore as well, with a lot of companies missing earnings or a lot of companies actually just beating earnings, but as Google asking just investors to stay patient, and investors are not taking that good at the end of the day. So we think in terms of hedge fund, there's a lot more maneuverability at the end of the day.
You talk about, I mean, just if we look at hedge funds as part of the whole alternative investment universe, and you talk about the portion of capital investments that go to alternative investments in South Africa compared to what we see globally. I think you cite around 2% here in South Africa compared to numbers around 10 in excess global. Just your thoughts on that and why you reckon that's the case.
Yeah, Pippi, so what we usually see from global hedge funds is we always see the bad news. We see investors getting wiped out, and that's carried over into South Africa. So we think the stigma behind hedge fund in South Africa isn't as good as it is offshore. We do think that's starting to change. We do see investors seeing the benefit of having a hedge fund in the portfolio now and having the diversification in the portfolio. We definitely think that awareness is something that can drive more flows into the funds, but we do think it will take time. But once we think that flows start rolling, we think it can be sustainable.
If we reflect on today, I mean, we've got gold popping and shining in all its glory. We are hearing that the safe haven trade is back in play. There's still lingering concerns around the Middle East. There's concerns whether China is going to finally, come out of the slow recovery mode that it has been, as well as the whole host of political concerns also unfolding. As you reflect on this time of uncertainty right now, what are the biggest risks that you are seeing on your radar?
Yeah, Fifi, you're exactly right with the China. China's top of mind for us at the moment. I mean, let's take a step back. China, about in the last month, they dropped their 7-day reverse repo rate, and they dropped their medium-term funding rate as well. We think there's a bit more. They can do a bit more. We think they can probably drop the reserve ratio requirement a few bips as well in the next 6 months or so. But we believe they did that because they're seeing very sluggish growth locally, and we're seeing that playing out in the commodity market as well. We saw iron ore getting absolutely hammered this last month, copper getting absolutely hammered this last month. So what we actually want to do, what we do in that trade is we definitely underweight commodities at the moment, and where we can, we hedge. We do some hedge trading, so we actually protect investors on the downside.
Yeah. Bringing the conversation back home, we have seen some political unfolding as well, but that has been taken as net positive by the market. I mean, just heard from 91 a little bit earlier that our government bond auction continued to get support from foreigners, and we're told that they're making quite the strong comeback as a result of what looks like a optimism that the GNU, the Government of National Unity, will get its act together and will actually deliver on its reform agenda. Your thoughts on SA right now?
Yeah, so Fifi, from a Novara point of view, it's the first time, I won't say in a long time, that we overweight South Africa, but we really think that the building blocks are right for some proper returns over the next year. I mean, you've got potential drop in the repo rate. You've got the two-pot system playing out into retail sales potentially over the 6 months, so that can be a little bit of boost in the retail sales. And you've got still some pretty juicy bond yields. I mean, it's come down a lot. It come down a lot, but we think it can go more from these levels.
If we take a step back and we look at the market performance for the entire year, notwithstanding the fact that we are seeing a whole lot of volatility in commodities, particularly in the month of July, the resource complex has actually been the outright winner on the JSE. There's been a bit of dabbling back into financials and retailers on the expectation that relief on the interest rate front will provide relief on the consumer front and benefit this sector net. But there's also been quite a lot of interest in the small caps arena on SA. So when you talk about being overweight South African equities right now, where across the equity market are you seeing the most opportunity and with that the most risk?
Yeah, so we love the financials, and in the financials we like the banks and the insurance, but we like the insurance a bit more. We think they're going to be the biggest net beneficiary of a rate cut as well. On the small cap side, we do like the SA Inc. small caps, as you said. I mean, they're trading at very low multiples. We've been buyers in some of those shares as well, in the likes of Motors and etc., who can actually benefit from a recovery. And we at Navarro, when we speak to our macro strategist, we just think if you pencil in a 2-3% GDP growth somewhere in the next 3 years, not necessarily in the next year, we think stocks can do really good returns. I mean, factoring in Transnet, we're hearing some improvement from Transnet. We're actually hearing that the CEO they have there now is keen, willing to work with the private sector as well. You're seeing reduction in load shedding, so we actually think that this is a good time to be local, to be overweight local, but still from a hedge funds perspective, we're still not taking massive risks. We overweight, but we are hedging some of those positions locally as well, especially those that ran very hard in this last 2 months, as you've mentioned.
All right. Circling back to the point that you made about the juicy returns in the bond market right now, but the fact that you don't think that the bottom has kicked in terms of the yield compression we have seen, how low do you reckon they can go? And then what part of the curve are we talking here?
Yeah, Fifi, we've loved the back end of the curve. Obviously, you've seen the biggest reaction from a growth point of view from the back end. We think that the big risk for our curve now is the US 10-year, which is the risk-free rate that we get compared to. We think the BOJ, there can potentially be some increase in term premium if the BOJ has to lift more than expected. And the top of our minds, beside for the China debacle at the moment, is the Trump versus Kamala election at the end of the year, which could potentially be, I won't say catastrophic, but we can see an increase in their 10-year yield if Trump takes office. But to get back to your point, Fifi, we like the middle of the curve at the moment. We were overweight the back end. We're moving to the middle of the curve just to be a bit more defensive. We think that up until the end of the year, we think there can be some profit taking now, but you can probably see up until 5% in the middle end of the curve from these levels if all is well, all things equal.
Fingers crossed there. But Handre, thanks so much for your time. Just sharing, of course, some of the calls that you guys are making as Navarra. Handre Retief is a portfolio manager over there, helping us wrap up closing bell Southern Africa for today. So it's 81,199 points for the JSE Rand.